Gold and silver miners are plummeting. So let's see what's happening. Specifically, we're going to look at Coeur mining, CDE. This was a recent request from a member at myfinancesteacher.org. And while this video goes live on 8th of May for the members here, I'm going to make it public sometime in the second half of May. So if you want to see similar evaluation updates on a range of gold and silver miners without a couple of weeks delay, you are more than welcome to join us at myfinancesteacher.org. And as usual in the valuation model, I look at the discounted per share value after production costs, long-term debts, and taxes. As you see, it's not an exhaustive list of all factors that might affect the share prices. This sort of fundamental valuation tends to work out in the longer term, but from week to week, share prices might, of course, fluctuate quite a lot with changes in the market sentiment. We're going to look at three valuation scenarios: conservative with a gold price of $1,600, balanced with a gold price of $1,900, and optimistic with a gold price of $2,200. And a quick note here is I don't think it's extremely optimistic to look at the gold price of $2,200, as I do expect gold price much closer to $3,000 perhaps in the next couple of years. Looking at the reserves, all-in sustaining costs, long-term debts, and taxes, Coeur mining has 3 million ounces of proven and probable reserves of gold in the ground, and that's after subtracting their production in Q1 of this year so far. So this is a more conservative number compared to what you might find in the presentations right now. In addition to that, the company has measured and indicated resources of gold of 3.42 million ounces. And beyond that, the company would have inferred resources, which we don't even include in the valuation model. Hence, all of the scenarios, whether optimistic, balanced, or conservative, do lean slightly more towards the conservative scenario. Coeur mining has proven and probable reserves of silver of nearly 236 million ounces, and an additional, beyond that, 285 million ounces of measured and indicated resources of silver. Beyond that, again, they have inferred resources of silver, not included in the valuation model. One of the reasons for significantly large volatility of share price of CDE, Coeur mining, is its relatively high all-in sustaining costs at $1,469 per gold equivalent ounce, GEO, with a gold-silver ratio used in this model of 70. The company has long-term debts of nearly $456 million, and for simplicity, for taxes, I assume a 20% tax on all of the miners that I look at. Now let's continue. Coeur has 280.3 million shares outstanding, out of which 1.55% are in insider hands. This slightly larger than usual percentage for insider shares is a very positive sign for the reason of aligning incentives of the management and the shareholders, and because insiders would be more aware of what's actually going on with the company. For discounting, I use the discount rate of 5%. So let me know down in the comments below if it's enough for this sort of gold and silver miner. In defense, I would point out that the company itself uses this 5% discount in calculating NPV of their gold mining projects. Looking at proven and probable reserves and the production guidance for 2022, the life of PNP is going to be around 13 years. And if we add half of measured and indicated resources, the mine life is extended to 21 years. That's applicable for our discounting. Finally, let's look at our conservative and balanced valuations. And the reminder, in the conservative and balanced valuations, we only look at the proven and probable reserves in the ground, as if the company didn't have any of the measured and indicated, never mind inferred resources. For conservative valuation, looking at the gold price of $1,600, the conservative valuation is pretty low at just under 80 cents per share. So this shows you that the risks are extremely high. And again, one of the main reasons for that is relatively high all-in sustaining costs, meaning that when the gold price drops, the margins drop really fast. And the balanced valuation is not extremely far from the ongoing market price of around $3.80, if I remember correctly. The balanced valuation at the gold price of $1,900 would be just over $4.70. So at the moment, I think Coeur is quite undervalued. And before looking at the optimistic valuation, let's have a look at some of the very important highlights. The amount of cash balance that CDE has is 73.3 million. So I would say this is a relatively comfortable cash cushion, but it would be nice to see this somewhere above $100 million. As none of the gold and silver miners, of course, want to repeat the destiny of Goldcorp, which used to be the largest gold miner in the world, but alas, it doesn't exist anymore due to some of their liquidity crunch problems and large amounts of debt. Another important factor discussed in the recent Q1 2022 report is rising costs due to ongoing inflation. So that's perhaps another factor that suppressed CDE prices as well as prices of a lot of other miners, especially miners with higher production costs, over the last year or two. We'll have a look at more charts in a minute. Among other interesting highlights, the company expects that the production will increase by mid-2023 at their Rochester mine, that is in the US. And interestingly, the NPV of this project of production growth is $348 million at 5% discounting. And with the shares outstanding of under 300 million, that's an addition of over $1 per share in valuation. So the prospects for CDE into middle next year are still quite positive. Another very interesting recent development that they announced at the end of April this year is a new silver-lead-zinc discovery at their Silvertip project in Canada. And looking at the gold and silver prices as well as the share price of CDE back in April, it looks like this discovery hasn't been priced in by the markets yet. So once gold and silver prices finish with the ongoing intermediate cycle low and perhaps rally into the new intermediate cycle sometime over the next several weeks, the prospects for Coeur mining are quite attractive in my opinion. Finally, let's have a look at our optimistic valuation, where we still are not outlandishly optimistic. We only look at the value of proven and probable reserves and only half of measured and indicated resources, as they're a little bit less certain than proven and probable reserves, but we still don't even include any of the inferred resources. So we're still, even in our optimistic valuation, do lean a little bit more towards the conservative side. And we plug in the gold price of $2,200, giving us an optimistic per share value of a little over $12. And with the current market price under $4, if you do expect gold to rally into a new intermediate cycle over the next 1 or 2 months, again, you should probably expect CDE to do relatively well. Now let's have a quick look at the charts. At the top of the chart, we see the share price of CDE, which has dropped quite significantly since early last year, from around the prices of $11 or so down to $3.8, $3.9 right now. And of course, there are a number of factors for this, mainly weakness in gold and silver prices over the last year or so, but also increasing energy costs. At the bottom of the chart, we see the correlation between CDE prices and gold price, that's in the middle of the chart. And at the very bottom, we see the correlation between CDE price and silver price. Clearly, these two do look very, very similar, but if you are really forced to choose here, you perhaps would choose the correlation between silver and CDE, as that is mostly positive as opposed to slightly less mostly positive correlation with gold. And that's kind of interesting because gold production is double the size of silver production for Coeur mining. But historically, down from 10 years ago or so, silver did actually used to be a larger share of production for Coeur mining. So with a greater correlation with silver rather than gold, this might also have added something to a relative weakness of Coeur mining share prices over the last several months. Because looking at the gold price since late 2020, early 2021, the gold price is mostly sideways, ranging anywhere between $1,700 and well below $2,100, and it's a bit above the middle of the range right now at $1,890. Whereas looking at silver, it's mostly sideways to down, ranging anywhere from $22 up to $29, and at the moment it's much closer to the bottom of this range at around $22.50. So gold is sideways, silver is sideways to down. Correlation between CDE and silver is slightly greater than that with gold, all contributing to relative weakness at the moment while precious metals are weak. And looking at energy prices, this is the price of crude oil, again going back to late 2020, early 2021. Crude oil since then has actually tripled at the peak in March this year. It's still pretty high at above $100 at the moment. And as I mentioned, Coeur Mining did talk about increasing production costs in their first quarter of 2021, also adding to downward pressure to share prices. But again, in the longer term, if you do expect precious metals to make new highs, perhaps even above 2200, the outlook for CDE is quite exciting, again, due to those high production costs. Because if the price of gold increases by only 16% from 1900 to 2200, the margins over Coeur mining would nearly double. Hence, miners with relatively larger production costs are actually benefiting or suffering from greater leverage versus precious metals prices. And that benefit or suffering depends on what is actually happening to those precious metals prices. And lastly, by the way, looking at the crude oil price, perhaps there is a 35% chance we've seen the intermediate cycle low on crude oil over here in late April, with the cycle lasting for 144 days, as that's relatively close to the average duration of 163 days since mid-2017. We see crude oil has made a new high versus that mid-April high, so again, that is a positive development. Perhaps a new intermediate cycle is going to push crude oil prices back towards $120 over the next few weeks. But crude oil is still kind of extended a bit far above its 200-day moving average. And if, hopefully, there are some news on possible resolution of the Russian-Ukrainian conflict, that could drop crude oil prices down into a proper intermediate cycle low. So if you are entering into a crude oil trade right here, I think it's very important to use relatively tight stop losses to avoid a crash. That's all for now. Let me know what you think about Coeur mining in particular, or any other gold and silver miners in general. Have a nice day. Bye-bye.